Very good evening, everyone. This is Milan Vaishnav. I welcome you all to the show. Um, we are just a day into weekly expiry, and today we have had a quite eventful day rather. The session was a total non-event, but the day was eventful. We had certain uncertainties revolving around the tariff. We had MPC decision coming out that came out in the morning today, and the markets stayed on the expected lines within the range. So we have a couple of things to consider before we head into the expiry day tomorrow. Tomorrow is weekly options expiry coming up, and options data show some interesting yet quite tentative setup for tomorrow. So I'll walk you through the couple of important things that we need to keep in mind with regard to the session tomorrow as we approach the markets. And uh, and that being said, we will also need to keep in mind overall sectors and stocks that we need to be looking at, the sectors especially, and certain important levels of both the key indices. Nifty Bank has had some relative underperformance over the past couple of days. It has its own reasons, so we'll take a look at those levels as well. And then I'll walk you through certain important sector placements, something that we can expect some relative strength and some protection if we have to open on the downside. So before everything else, let me walk you through some couple of important charts today. And to begin that, I'll begin with Nifty. Before I say anything else, I would first like to point out that we had RBI's monetary policy decision today that came out at 10 in the morning. The street was absolutely divided. Sorry, it wanted to get delighted, but it was divided in the morning, where half of the participants, those were surveyed, expected a rate cut, half of them expected a status quo, and the monetary policy actually maintained a status quo on every front. The rates were unchanged, the repo rate was unchanged, MSF facility remained unchanged, and even the stance that RBI had remained unchanged at neutral. So quite a non-event, and that no rate cut weighed a bit heavy on the markets. They continued to test the lower edge of the support that they are trading at, and relative underperformance in the Bank Nifty continued. With that being said, uncertainties continue to revolve around the US tariff issue as well. India has responded saying that it won't yield to the US pressure. They are calling the penal tariffs as unjustifiable, as something that have been inflicted upon us, something in a way that the government feels that India has been singled out. But regardless of this kind of uncertainty, one thing stands for sure, that government is not going to yield to such unjustified demands from the United States, and it's not going to do anything at the cost of SME, MSME sector, which is the backbone of the economy, and also at the cost of healthcare and the agricultural space. So by and large, we should not be worried about something detrimental to the economy that government would agree to over the coming days, except the fact that uncertainty continue to revolve around us, and the apparel stocks and certain stocks like textiles, apparels, gems and jewelry, they all who have ended up attracting higher tariff as compared to their counterparts like Bangladesh, Vietnam, and all that, they continue to suffer. But that is a phase which I expect to go away as we go ahead in time. Before I say anything else, I would also like to discuss some interesting options data that today In today's trading session, we saw some good amount of writing of calls getting done at 24,600 and higher levels. Some incremental puts were also seen being written at 24,500. But overall, open interest data shows that 24,500 is the place where there is second highest accumulation of the put OI, the lowest being at 24,000. So there are two interpretations to this. First of all, we can fairly expect that 24,500 will likely act as support unless we have something, significant negative thing to deal with, because below 24,500, there is absence of any major call OI. So we can fairly expect 24,500 to act as support, that is point one. And in case of any eventuality, something very negative coming up overnight, it's not expected, but I'm just saying, even then, in a worst case scenario, 24,000 will continue to act as support. Now, importantly, these levels are corroborated by the levels that we see on the chart. This is the daily chart of Nifty. Beginning the month of May, Nifty had created a trading range with 24,500 as the lower edge of the channel of the trading range, and 25,150 as the upper edge, which was acting as resistance. So the 650 point range was the range that the market traded until it attempted a breakout sometime in the last week of June, that eventually failed and the market came inside the range again. So now the key point here I'm trying to drive home is that we need to be reactive to the market technicals. By being reactive means reacting to the key levels that are either being taken out or violated, but not getting predictive with the markets. So what the thing I see here is that Nifty has, for the third day, for the fourth day, in fact, it has taken support at the levels of 24,500, and it has not yet violated the same. And therefore, until and unless these levels are not violated, we can fairly expect the markets to trade in a range. Point one. Point two, the 100 DMA, which is supposed to act as a major support on a closing basis, is at 24,450. We round it off 24,452. We round it up to 24,450, and that makes this 24,450 to 500 zone a major support zone for the market on a closing basis. Let's zoom out and take a look at the weekly charts. Weekly charts, the 50 DMA, the all-important 50 DMA, which has played a vital role in the past, stands at 24,200. So in a worst-case scenario, even in case of any negative thing that we have to deal with, 22,200 will further act as a major support zone for the markets on closing basis. Even let's negatively or conservatively presume that we have some negatives to deal with. We see the markets violating the 24,500 level, 24,500 levels eventually. Even then, the major drawdowns are not expected. And as long as we are trading above 24,200, the primary uptrend continues to remain in place. And at best or at worst, either way you look at it, we continue to remain in a broad trading range. Nifty Bank has been underperforming last days, and the major reason is the uncertainty that is revolving around it. It continues to remain relatively weaker than Nifty Bank, than Nifty, and the immediate and the breakout that it had achieved above 56,000 has now failed. So we can fairly expect the Nifty Bank to find its initial support at 55,000 and then at 54,700. But by and large, on this front also, I do not expect any major downtrends to occur, as if we see a little bit on a wider note or on the broader note, it remains in a primary uptrend with no structural violation so far. So that is how we are stagnant. By the time I finish discussing something else, as well. You may continue posting your questions, sectoral questions or broad market questions, if any, into the comment section. We would be more than happy to come to it um, and talk about it. So feel free to post as many questions as you like. I will try my level best to take each of them and reply to it. Let us also take a look at some sectoral setup on the charts. If we are seeing some turbulence in the markets, as I had mentioned out or I had pointed out in the previous week as well, we need to remain with the stocks that are relatively resilient, those which are enjoying good relative strength, and also continue to post or rather protect profits at higher levels. So if we look at the chart setup here, sorry, the sectoral setup here, Nifty IT index continues to remain in the improving quadrant. That means that although it is losing its relative momentum, as we have seen because of the underperformance, I overall expect that Nifty IT is in the process of bottoming out. Taking an individual look at the Nifty IT charts, sector index, it is quite evident because Nifty index itself is now oversold and it doesn't have an history to stay much oversold as of now. So there are chances that it is in the process of bottoming out and eventually the IT index will continue to improve its relative momentum while continuing to stay inside the improving quadrant of the RRG. Now, first of all, those who are hearing about relative rotation graphs for the first time, it's a visual representation of relative strength. It compares different sectors. As of now, here on this chart, it compares different sectors against each other, as well as the benchmark, which in this case is broader Nifty 500 index. That is one thing. So Nifty IT is something that I'm looking at. I'm also looking at pharma index doing well, pharma stocks doing well because it has rolled inside the improving quadrant a week or two ago. And I expect some better improved relative strength going ahead from here from the pharma pack. Now, individually, you might see the stocks declining, you might see the sector declining, but when I talk about relative performance, what I'm trying to drive home a point is that in event of any eventuality in the markets, see, when markets suffer, everybody suffers. When markets come down, everything come down. But the sectors that are relatively stronger, like healthcare, like pharma, a bit of IT in this case, and auto and metal, and those sectors, the sectors that are enjoying better relative strength, they decline, but they decline quite less. They give a lot of resilience um, to your portfolio, or that space remains very resilient if it is showing good rising relative strength. So that is what we have right now. So therefore, pharma along with IT, I expect it to stay relatively better in the weaker markets. Another sector that I need to keep an eye on is metal. It not only stays inside the relative leading quadrant of the RRG, but it has kept its primary uptrend intact. The daily charts are taking support at the 50 DMA, keeping the primary trend intact, and so are the weekly charts. And the weaker dollar is likely to assist. Now, the reason I'm betting a bit on the IT or the metals or the commodities space per se, broadly speaking, is that weaker dollar is supportive to the sectors. IT companies enjoy a good dollar revenue in with weaker rupee, and that's the reason that IT generally tend to do well. Secondly, if you look at the metal also, weak dollar is good for metals and commodities. They are generally inversely related. If the dollar gets stronger, you will see some pressure in the metals and the commodity space. Secondly, Federal Reserve kept its rate unchanged just a couple of days ago, and that has further increased the possibility of a minor, modest cut in the next cycle. And due to the immense political pressure that the Fed chief is encountering right now, it is likely to keep dollar under check. So a bit of bounce here and there, but by and large, dollar index is not running away beyond 100. That is what my point of view is, and that is likely to aid the metals and the commodity stocks. So what I'm trying to drive home a point is that we are on the tenterhooks. Nifty is trading the testing the lower edge of the support that is placed at 24,500. A violation may make it temporarily weaker. I'm not denying that, but in weak markets, as we have to stay invested, as we have to keep our portfolio, it's important that we keep our portfolio somewhere in the relatively stronger space and sectors so that at the end of the day, we remain relatively resilient. Our relative performance is equally important, or in fact, more important in such turbulence or difficult times. Good evening, Damodaran ji. It's good to see you all here. Should we wait for RSI goes to oversold? No, not at all. See, RSI, and we don't buy or sell RSIs. What we buy and sell is the price. So therefore, nothing should ever be read in isolation. We have to stick to the core price action. And let's say if we are seeing a bounce back and Nifty doesn't violate 24,500, then there is no need to wait for the RSI to go below 30 because it's not necessary that it will go. Therefore, I would suggest you that you focus solely on the price levels and get reactive only if certain levels are violated on the downside. In this case, it's 24,500. Then 200-300 points Nifty sliding will not be a big thing. But even then, if 50-week moving average is tested, which is placed at 24,200, even then the primary uptrend will not stay disrupted. It would just be a major mean reversion by the market. So RSI not that important. If you read it in isolation, it should always be read in the context with the price. I hope this answers your query. Another is Nifty auto space. Just like the pharma, there is no retracement at all in auto space. Some relative momentum was tapering off that kept the sector relatively underperforming. But right now, what we see here is a wonderful rectangle having formed on the CNX auto index, Nifty auto index, and that lays a very good foundation of certain auto stocks that could be bought. Few of the auto stocks, while they have not performed, many of them, I'm not naming them individually, but many of them have done very good. I talked about it in the past, and some of them are sitting on a wonderful multi-month base, and they are looking at a multi-month breakout. I think the coming time would tell us that story. So Nifty Pharma, Nifty Auto, IT stocks, many of them on individual basis have showed some feeble signs of bottoming out, some feeble signs of forming a base for themselves, laying a ground for some technical rebound. So are certain very good quality auto stocks, and certain good broader markets are also likely to do good. Certain good quality mid cap stocks are also showing signs of resumption of an up move. So by and large, so far as tomorrow's expiry is underway, we have to be very much focused on Nifty's behavior vis-a-vis 24,450 to 500 levels. As long as these levels stay protected on the charts, we will see the Nifty staying under broad consolidation and not seeing any major drawdowns. We need to get concerned about this. We need to get concerned about the markets only if on a weekly time frame. See, I'll tell you, 24,500, the violation of this level will induce some short-term jitters, some minor jitters in the market. But if we zoom out and again take a little bit of a bigger view on the markets, as long as 24,200 stays protected, the primary uptrend stays in place. It would only be the violation of 24,200 that we will see the primary uptrend getting violated. And therefore, that is something we need to keep an eye on. On the upper side, I expect the upsides to stay kept at 24,700. So in short, if we talk about tomorrow's expiry, very less chances that 24,450 to 500 will get violated on closing basis. Very less chances that 24,700 will get taken out on the upside. Expect the market to continue to stay in a range, and we need to keep our eyes very closely focused on Nifty's behavior vis-a-vis 24,450 to 500 levels. Upon chart reading and Trump's behavior, they both say 24,000 level. I will not say it is not safe because there are 70% chances that it will stay protected, because if you look at the derivatives data, the FIIs are still setting net short, and the net shorts are highest since last April, April of last year. So you will see downsides if something untoward happens, but those downsides would be a knee-jerk reaction offering you a good opportunity to pick up good quality stocks. And eventually the downsides, if any, are expected to be short-lived. So right now, again, as I just said, that I would stay reactive. I would not get predictive on the markets. And from a very immediate short-term perspective, I will watch Nifty's closing vis-a-vis the levels of 24,450 to 500. If this zone stays protected, there are less chances of any major drawdown. Otherwise, we could see some completion of the mean reverting process with the Nifty testing 24,200, but that's a far cry now, and we should not be looking at it as long as we stay about 24,450 to 500 levels. So I believe that's it for the day. If you have any questions, you may continue to post it. You can reach out to Upstox anytime. I would be more than happy to come back to you. And it is really wonderful interacting with you all. And I look forward to connecting with you all again. So far as tomorrow's expiry is concerned, keep the levels of 24,450 to 24,700 as your potential trading zone, and trade the market accordingly. Major directional trend are not expected to take shape as long as we are above 24,450, 500 levels and below 24,700. We need to take out either the upper edge or violate the lower edge to create some short-term trending bias. But unless that happens, I expect the markets to stay a bit volatile, but also within a broadly but nicely defined trading range for tomorrow. So that's all for now. It's as wonderful talking to you all. See you all again soon. Thank you very much. Have a great evening ahead. Thank you.